Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, May 28th, and we'll see how things look for Thursday, May 29th. To recap what happened on Wednesday, it was a rather lackluster day. The market opened higher, but couldn't hold the momentum. The S&P hit its high early, falling short of the R1 resistance level at 59.46. Prices slipped below the unchanged level, found support just above the daily pivot, but ultimately dropped below 5,900, closing down 0.56% on below average volume. Not exactly a thrilling session. The big story was NVIDIA's earnings, which were reported after the close. The numbers were strong, sending NVIDIA stock and the futures higher in after-hours trading. But here's the catch. Historical patterns show mixed market reactions after NVIDIA's big earnings, so don't get too comfortable just yet. Switching over to the technical picture, the short and intermediate term ADX, which is our trend indicator, are both below 20, signaling no clear trend. We are positive because the green line is above the red line. Prices are still above the 20, 50, and 200-day moving averages, which keeps the longer-term outlook positive. The parabolic SAR flipped bullish, a potential positive sign. But momentum indicators such as the PMO and stochastics are looking overextended and starting to roll over. The TTM squeeze is also declining, hinting at fading momentum. Meanwhile, the NASDAQ 100 bullish percent index is strong at 82, but overstretched. Checking out the broader context, the 10-year Treasury yield ticked up to 4.48%, still below that key 4.5% level. The VIX closed at 19.31, elevated but not in panic territory. Investor sentiment remains cautious at 65, with many staying hedged for unexpected events. The Financial Times reported that the Trump administration is pushing for semiconductor software firms to halt sales to China, which could ripple through the sector. The Fed meeting minutes also reiterated concerns about growth, employment, and inflation, with no rate changes expected in June. Elsewhere, the dollar index climbed back above 100, while mortgage rate applications dropped 1.2% week over week. Looking ahead to Thursday, May 29th, there's a very heavy calendar with initial and continuing jobless claims, the second GDP estimate, and pending home sales. A big GDP revision could shake things up. As far as market dynamics, historical data shows that since 2002, there's positive seasonality for May 29th, and NVIDIA's earnings are boosting the futures, suggesting a possible strong open. But we always ask the question, can the market hold those gains? We've seen selling into strength lately, so don't be surprised if momentum fades. Key levels to watch. Check the pivot points that are posted on the YouTube community tab. The 5,900 level is critical, both technically and psychologically. If selling pressure kicks in, look to the moving averages for support. Indicators to monitor. On the bearish side, we're seeing weakening signals in accumulation distribution, the Chaikin money flow, and the Chaikin oscillator, as well as the McClellan oscillators and long-term indicators such as the Kopit curve and Zohorchak method. On the bullish side, the NASDAQ 100 BPI, parabolic SAR, and shorter-term moving averages are still supportive. In conclusion, the market's in a positive spot for the short, intermediate, and long term, but it's currently lacking conviction. The ADX readings below 20 tell us there's no clear trend driving the action. NVIDIA's earnings might spark some early optimism, but Thursday's economic data will likely set the tone as well. Will buyers step in or will sellers take control? We need a breakout or a breakdown to get some real direction. Thank you very much, and I will talk to you in the next podcast.